Most investors assume emerging market AI startups win by localizing products built elsewhere. But an Egyptian founded team has joined Vercel because it built infrastructure the global platform wanted. The overlooked signal is not cheap talent. It is strategically valuable technology built outside the usual hubs. Stakpak is an AI infrastructure startup founded by Egyptian entrepreneur George Fahmy. The company started with a simple but ambitious idea. Software infrastructure should increasingly manage itself. Its team developed open source tools and an autonomous DevOps agent. In plain language, that means an AI system designed to help configure, deploy, and operate cloud infrastructure, the work normally handled by specialized engineers. In July 2026, Stakpak announced that it was joining Vercel, the developer cloud company behind Next.js. Independent African technology publications describe the transaction as an acquisition. The Stakpak team is expected to contribute to Vercel's broader agent infrastructure strategy. Financial terms were not disclosed. The obvious story is that an Egyptian-founded startup achieved an international acquisition. The more important story is what Vercel appears to be buying. Stakpak was not primarily selling a localized Egyptian application. It was developing infrastructure for a global technical problem: how autonomous software agents deploy code, manage systems, and interact with cloud resources. That distinction matters. Emerging markets are often described as sources of affordable engineering talent or destinations for adapted products. Stakpak suggests another possibility. A small team can use open source distribution, global cloud infrastructure, and venture capital to build a strategically valuable component of the global technology stack. That is a different kind of geographic advantage. There are three pieces of evidence supporting this interpretation. First, founder George Fahmy said Stakpak began in Egypt, bootstrapped for approximately 2 years, and built its technology with a small Egypt-based team before raising venture capital and moving to San Francisco. Second, Vercel's own data shows why agent infrastructure has become strategically important. In April 2026, the company reported that more than 30% of deployments on its platform were initiated by coding agents, approximately 10 times the share 6 months earlier. Third, Stakpak is not an isolated acquisition inside Vercel's strategy. Earlier in July, Vercel acquired BetterAuth, the company behind an open-source authentication library. Vercel said the transaction would help it develop identity systems for AI agents. Together, these developments suggest a stack is forming. Agents need identity, secure execution, deployment, and infrastructure management. For founders in Cairo, Lagos, São Paulo, Warsaw, Karachi, or Jakarta, the lesson is not simply build another developer tool. The deeper lesson is to start with constraints that are globally expensive. AI agents create new operational problems. They run continuously, execute code, use credentials, and make changes faster than human teams can review them. A startup that solves one difficult layer of that system can sell to customers anywhere. Open source distribution can also reduce part of the geographic disadvantage. Developers can test a product before a company has a large international sales team. The code itself becomes a channel for credibility, feedback, and adoption. But geographic friction has not disappeared. Enterprise sales, customer trust, later-stage capital, and access to major buyers remain concentrated in established technology hubs. My analysis is that the most interesting emerging market AI opportunities may not always look like regional consumer platforms. Some may be globally oriented infrastructure businesses with distributed engineering teams. For investors, the defensible asset may not be the underlying language model. It may be operating knowledge, integrations, security controls, deployment workflows, developer trust, and experience running agents in production. The Stakpak transaction also offers a hypothesis worth testing. Global platforms may increasingly acquire small specialist teams because building every agent infrastructure layer internally would take too long. If that hypothesis is correct, early-stage investors should monitor open source adoption, international developer usage, and integration depth, not only local revenue. This remains a hypothesis, not a conclusion proven by one acquisition. The strongest counter-argument is that Stakpak could be an exceptional talent acquisition rather than evidence of a repeatable company-building model. The price was not disclosed. We therefore cannot determine whether the transaction produced a strong venture return. Company claims about productivity improvements also require independent validation. There is another risk for emerging market ecosystems. If promising companies relocate early and their intellectual property, leadership, and economic value move abroad, the founder may succeed while the original ecosystem captures relatively little long term value. An acquisition is not automatically proof that a regional technology cluster is becoming stronger. Over the next 12 to 24 months, investors should monitor four signals. First, are more emerging market AI infrastructure companies attracting global developer adoption? Second, do they retain engineering and product leadership in their original markets? Third, are global buyers acquiring products and intellectual property, not merely recruiting individual engineers? And fourth, do early local and Africa focused investors generate measurable returns that can be reinvested into the next generation? Repeated evidence across several companies would turn an interesting acquisition into a more credible investment pattern. Stakpak does not prove that Cairo is about to replace Silicon Valley. It suggests something more useful. The geography of important AI infrastructure may be broader than the geography of the largest AI companies. The question for investors is this: are emerging markets simply supplying talent to the AI boom, or are they beginning to build the infrastructure assets that global platforms will need to own?